tell. Financials, by the way, they're higher today, too, as we highlight some other sectors. Jason Snipe brings me to you. You bought more Goldman Sachs. Goldman, J.P. Morgan, and Bank of America are up on the week.
Yeah, 100%.
That tells you as much as you almost need to know about the state of stocks and what the market has done, because, you know, yields were collapsing on Monday. Concerns about the economy were rising. The VIX was going through the roof, and these stocks were in question. You bought more Goldman. Why?
100%. So, and to your point, the price action tells a lot of the story this week with all the turmoil that we've seen. But again, as it relates to Goldman, I look at what the story has been over the last 12 months. They've cleaned up and got rid of the consumer business. I think that's been a major plus. You know, capital markets activity, I think, will come back online in a meaningful way starting in 2025. Underwriting, all of that, I think, has bottomed. You know, and I look at a stock that had a little bit of pullback last week, and I decided that, you know what, this is a stock that I'm willing to go overweight on, you know, so that we decided to do so.
To refresh your memories, too, everybody, Stephanie Link's been buying Bank of America, Truist as well. That on Monday?
Yeah.
Correct?
Yeah. I mean, there are net interest income plays, and I think that net interest income has bottomed as well as margins. And I like the diversification of Bank of America at 1x book, buying back stock. Truist, I think, is a gem, a hidden gem that we don't talk a lot about. And it's also trading at 1x book, where numbers actually went higher after they reported earnings. So I like that.
You know what's not in these stocks, in my opinion? Mortgage rates just hit their lowest level in like 3 years or something. This week.
Yeah.
Housing side, I think maybe it's a 15-month low in mortgage rates. Either way, a housing cycle is not in these banks.
Yeah, we're at the lowest levels of mortgage rates since April of 2023.
Yeah.
Housing cycles are extremely influential on economies, and the multiplier effect of people being able to move and trade one mortgage for another, the multiplier effect on everything from renovation to remodeling. Banks play very heavily in the housing space,
you know who else
and
does?
I don't think anyone's expecting anything there.
No.
Perfect segue, too. Builders. Jason Snipe.
Yeah.
Bought D.R. Horton.
I did.
Because of the drop in rates?
No. Well, that's part of it. That's part of the story, because I think the wealth effect is a big story. But this company's just been executing very well. And it's not the first time we've been in the stock. We sold it about 2 years ago, got back in, obviously, recently. Stock is up 13.5% year to date. Their earnings were great, really phenomenal. But when I think about housing stocks and builders, I think about affordability. Affordability has been the story for a lot of these last few years. And with mortgage rates, to both of your point, where they are right now, I think creates an opportunity. 69% of their homes that they sold in the last 12 months were less than $400,000.
Yeah, I mean,
so
I'm sorry, finish your thought.
No, so that's why I think it's an opportunity here with a little bit of a pullback this week, so we decided to add it to the portfolio.
Mortgage rates down, home builders up. I mean, over the last month, the DR is up 26%. KB20, Lennar, Pulte, Toll, all with double-digit percentage gains. DR is the one you own, Steph.
Yeah, and it's a big position for me. I've been adding to it on the expectations about rates, but also because they have, as Jason just mentioned, a very good execution. Orders only grew 1% in the quarter, but gross margins beat by 90 basis points, and guidance for gross margins were up at much higher than expected, 50 basis points higher than what their guidance was at the high end. And their rental piece that they've been investing in, they actually said that has stabilized. That means they can actually buy back more stock this year and next year. And I think that's what people got so jazzed up about. And it's trading at 12 times forward estimates.
Okay. If there's an area of the market that's really been upset this week, it's travel. A number of these names, as you know, I mean, Airbnb yesterday was a disaster. Some of these other names, too. You sold MGM Resorts.
I did.
Why'd you do that?
And I think for me, it's a mixed bag as it relates to consumer. And you, Scott, you bring up Airbnb. You know, on the other side of that, I look at Uber, which had amazing earnings, right? But when I look at MGM, there's softness in Vegas, you know, going forward. There's softness in Formula One in November. It's a crowded industry. It's very competitive. It's costly. You know, so for me, we decided to move away from it. It's down 15% year to date. We've owned it for a while. It's been a small position. But when it comes to discretionary spend, we decided to take our money elsewhere and look at other opportunities in the market.
Okay. We're going to take a quick break. When we come back, we have more trades. Bryn Talkington's going to join us. She just bought a AI-related growth name. You'll want to hear what that is. Made a play in the crypto space as well. We'll cover both with her next.